So hi guys, so let's start the income tax revision. So first thing that we are going to discuss is basic concepts of income tax, where in this I'm going to discuss about certain definitions and rates of tax, surcharge, marginal relief and rebate provision. Agriculture income aggregation topic is there, like if agriculture income is there, how to compute the tax liability. So that topic I'm going to consider. In addition to that, I am also talking in the same chapter the total incomes concepts. So, for you, for November 2023, like nothing but old scheme, for you, assessment year 23-24 is what applicable. In your exam, whatever the questions they are testing, they will be testing on assessment year 23-24, nothing but previous year 22-23. Suppose if it is May 24, no. May 24, number 24, previous year 23-24, assessment year 24-25. Just year alone changes every time. So, very simple. The logic is very simple. Now you are writing November 23 exams, right? Which financial year is already completed? Tell me. A minute. So, which financial year is already completed? Right now we are in 23-24. Is this financial year completed? No. So 22-23 is already completed. So only on the completed previous year, completed financial year, only on that questions will be tested. So if the SSE is earning income in the previous year 22-23, that income will be assessed in 23-24 assessment year. Getting it? So based on this, the November 2023 entire question paper will be set. Got clarity? Now in the same video right now which you are watching. By the way, I'm going to upload chapter wise. Getting it? Now I'll upload this introduction plus total income put together. The next video will be residential status. That next video will be house property. That next videos will be salary. That next video will be like PGBP capital gains, like that. Then I will upload remaining chapter 6A clubbing, setup and carry forward, all that once again. Getting it? So in total income chapter for you as per study material, 115 JCJEE, nothing but alternate minimum tax. That provision is also covered. 115 BAC, optional tax system, optional tax payment or concessional tax payment. Getting it? So these two provisions are covered in total income chapter, which we should also discuss now. So effectively in this chapter, I'm going to talk about basic rates of tax, surcharge, marginal relief, rebate, AMT, concessional rates of tax, agriculture income, aggregation, all that. In addition to that, there are some incomes. Like generally in income tax, we all know that income is earned in previous year and the tax will be paid by the SSE in the assessment year. So income is earned in the previous year. The assessment for income tax will be done in the next year. That's called assessment year. But there are some cases, five exceptions, where income is earned in the year, previous year, in the same financial year, in the same previous year, department will collect a tax also. So there are some 5 cases. What are they? Like in case of non-resident shipping business, 7.5% of the turnover. Getting the point? Indian origin based turnover, 7.5% of Indian origin based turnover. So this is treated as deemed income. On that, tax will be collected by the department then and there. Getting it? Persons leaving India permanently, where they will not be returning back. Maybe they will be returning as a visitor, but not. They are going to settle at abroad. Getting it? So for them also, income will be taxed in the same previous year. So you are earning income in the same year. By the time, when are you leaving? So until the date when you are leaving, whatever income is there, on the date on which you are leaving, income tax department will collect a tax from you. Now for this, how they will collect a tax, how they will file IT return, all that were discussed at CA final level, which we don't have at CA intern. Next, persons who are likely to transfer property to avoid tax. If the department has got an information that some SSE, some person, they are trying to transfer property in order to avoid tax. So under 175, department will immediately collect the tax. Discontinued business. If at all you started some business, you are doing some business, this year you are discontinuing. Until the date of discontinuation, getting it? Whatever the date on which you stop doing the business, getting the point? Up to the date, whatever income is there, income will be computed by applying PGBP provision. Tax will also be computed on the same. That's it. So these are the 5 things. On this, a theory question might come. Getting the point? A theory question or an MCQ might come. Now the main discussion, main agenda, income tax revision. Now that's it. So we have various issues in the basic concepts itself. We have various issues, like we know SSEs are multiple types: individual, HUF, partnership firm, LLP, society, local authority, artificial judicial person, company. So no, these are all various types of SSEs under income tax law, and all of them, they earn income in 1 year. On that, the tax will be computed and paid, and IT return will be filed in the next year. That next year is called as assessment year. Fine. Now, in this, we have certain important points. By the way, this constitutional provision is also very important. This constitutional provision, 7th schedule to Article 246. This is the schedule which gave power to the department to give tax. This 7th schedule is having 3 lists. Union list, parliament. In that union list, there is an entry called entry number 82. There is an entry called entry number 82. So, which levies taxes on income other than agriculture income. So, by constitution itself, agriculture income cannot be levied for income tax. Getting it? Now, what do you mean by agriculture income? Definition of agriculture income is covered under 2 clause 1A. So, which is given in exempted income chapter. Which is given in exempted incomes chapter. So, only an income which comes under 2 clause 1A, only if an income that is coming under 2 clause 1A, only that is treated as agricultural income. If at all, you are thinking that it's an agricultural income, but that do not satisfy 2-1A definition, then it is not at all agricultural income. You see, any subject in CA course, especially CO or CMA, we should learn the subject like a thumb rule. Means we should have concrete clarity, no more questions again. Is it that, or is it this? No, you should not have such a kind of doubt. You should have a clear-cut clarity, crystal clear clarity, thumb rule kind of clarity. So with this particular revision, day before whatever you are watching, getting it, definitely gives you that thumb rule clarity. Next. Now, another important thing, what do you mean by subsection? What do you mean by clause? Very simple. We have section 10, right? 10 clause 1, 10 clause 1A, 10 clause 2, getting it, not 1A, 10 clause 2, 10 clause 2A, and you remember 10 clause 13A HRA, 10 clause 10 gratuity, 10 clause 10 AA, leave encashment, all that, yes or no? These are all actually clauses, not subsections. Many of us, we refer it as subsection 10 subsection 1, 10 subsection 2. No, they are actually clauses. How come they are clauses? Because 10 clause 1, 10 clause 2, are they dealing with any interrelated matter? No. 10 clause 1 says agricultural income is exempt. 10 clause 2 says share of profit received by a partnership firm. Share of profit received by a partner from the partnership firm is exempted. 10 clause 13A, HRA received by an employee is exempted to the extent of least of the following. 10 clause 10, gratuity received is eligible for certain exemption. 10-10A, leave encashment is eligible for certain exemption. Now you see, all these items, clause 1, clause 2, clause 2A, they are not interrelated. If the information under a particular section, getting it, if the points are not interrelated, they are not called as subsections, they are called as clauses. Suppose you see section 23, annual value computation, house property related section, 23. Getting it? Subsection 1 talks about how to compute annual value. Subsection 2 says for self-occupied property, annual value is 0. Subsection 3 says unoccupied property, some provision. Subsection 4 says deemed let out property. Subsection 5 says, real estate people, that kind of related provision. Getting it? Now you see, in all these 5 subsections, they are talking about annual value in different circumstances. Since all of them are interlinked, you can call them as 23 subsection 1, 23 subsection 2, 23 subsection 3, 23 subsection 4. They are subsections because all the subpoints, all the sections inside 23, getting the point, they are interrelated to each other. So we can call them as subsection. Very simple. So here we have given the definitions. Remember, these can be tested as MCQ or they can be given as a short answer questions. Somewhere in May 2022 or November 22 attempt. So what do you mean by proviso and explanation? Theory question for 4 marks they have asked. A straight theory question. Explain the difference between proviso and explanation with an example. So you need to write this. Getting the point? So there is a possibility that subsection clause will also be tested. So here, so what is subsection? What is subsection? A section may have subsections or clauses or subclauses. When each part of the section is independent of each other, one is not related with the other, they are independent, then they are called as clauses. If within a section, multiple parts are there, If all the parts are interrelated, getting it, then they are all treated as subsections. Only you read all the complete subsections to understand the entire section. So examples they have given. So I gave certain examples, they have given different example. Then proviso and explanation. Proviso. What is this proviso means? Suppose you see, there is a section called 48. 48 is a section talks about computation of capital gains for non-depreciable assets. Section 48 section talks about computation of capital gains for non-depreciable assets. For that section, there is a proviso 2. The proviso 2 says, for long-term capital asset, indexation facility is available. Getting the point? Proviso 3 says, debentures and bonds, they are not eligible for indexation. Getting it? So like that is for section 48. So here they might have given some different examples. Suppose 80 GGB, 80 GGC. They have a proviso. What this proviso says is, if at all any donation is paid in cash, getting it, that is not at all eligible for deduction. Fine. So proviso means what? For a particular section or subsection or a clause or a subclause, proviso can be added either to any of these 4. Generally, if you look at Income Tax Original Act, you don't find the word proviso at all. You will find the word provided that, further provided that, also provided that, provided further that. Like that, these words you will find. The moment you say provided that, it's a proviso. Now within the same clause or same subsection or the section, under one particular subsection, proviso, provided that, provided further that, provided further that, like that 3 times were there. Provided that, provided further that, provided further that. So provided that means proviso 1. Provided further that means proviso 2. Provided further that means proviso 3. Anyhow, all this I've covered, this is a revision class at the end of the day, remember. So I cannot give entirely 100%, it's not possible within the shortest time that we have. Getting it? So proviso, then what will be there in the proviso? Proviso may have an additional condition, or the proviso may have exception. Getting it? Either it may talk about a condition or it may talk about an exception. So the proviso spells out exceptions or conditions to the main provision. Main provision may be section, or it may be subsection, or it may be clause. Now there is something else called explanation. What do you mean by explanation? There is a section called 43 subsection 1 in PGBP. What is it? 43 subsection 1, which talks about actual cost. So while adding asset in the block, whenever you purchase any asset, you need to add it in the block of asset. What is the actual cost? So there are explanation 1, explanation 2, explanation 3, explanation 4a, explanation 5, 13 explanations there were. So explanation means they are giving additional clarity, additional information. So it gives a clarification relating to the provision. Explanation gives clarification relating to the provision. That's it. That's called explanation. So this itself can be tested for 4 marks question. Be careful. Don't worry. I'm entering into the straight away. I'm entering into this computation part. Okay. Now what is Finance Act? You just read it on your own. It's very easy. What do you mean by circulars notification? Circulars will be binding only on the department. Circulars will be, department is bound. Department must follow. For SSC, it is option. Whereas notifications are issued by CBDT, which will be binding both the SSC and department. Then we have something called charging section. It's not that important. Now straight away I will enter into rates of tax. As I already told you, in income tax there is a concept of previous year and assessment year. Getting it? Suppose assessment year 23-24. What do you mean by this? In this assessment year, income tax will be computed by calculating your total income. Total income I will calculate and compute tax. Total income of which year? Previous year. From assessment year point of view, previous year income is what? This year we will compute tax and we will compute income and pay the tax and file the IT return. Getting it? So previous year assessment year is given here. India definition is given. SSC definition is given. Not that important. Getting it? Assessment person definition is given. So for all of that important some extra detailed information is given here. Now this is important for you. Now they may ask you a straight theory question. Dayabhaga school versus Ritakshara school of Hindu undivided family. So what's the difference between them? So Dayabhaga school, it is applicable only in West Bengal and Assam, whereas Mitakshara is applicable for rest of India except West Bengal and Assam. Getting it? So in Mitakshara, one acquires a right in the property by birth. So a person, if born in HUF, by default, because he was born, he has a right in the property. Getting it? Whereas here, no, nobody will acquire the right in the property until the ancestors were there. So fathers and brothers would be co-parcels of the HUF. Next. So straight away I will start now the tax rates concept. Rates of tax. Yeah, this is what you're looking for, I know. So what are the rates of tax? So generally the rate of tax for company, if you call domestic company, the rate of tax is if previous year 21-22. If previous year 2021, if the company's turnover is not exceeding 400 crore, then in the current year the tax rate is 25%. That is for companies. Anyhow, at CA Inter, company taxation, AOP taxation, society taxation, that and all were not covered. At CA Inter, individual related taxation is only very important. So how to tax individuals? We all know that individuals are two types, resident and non-resident. Straight away I'll go here. So individuals, no, they are two types. So either the individual may be resident or the individual may be non-resident. Correct? Now for resident individuals, no, we classify into three categories: normal citizen, senior citizen, super senior citizen. Normal citizen means age is less than 60 as on 31st March of the previous year. As on 31st March of the previous year. Simple. As on 31st March. Suppose 31st March 23. 31st March 2023. As on this date, he has not completed 60th birthday. He has not completed. So when the SSC is 60th birthday, when the SSC is celebrating 60th birthday means what? 60 years is completed. 60. See, when you were born, the day on which you were born, you don't celebrate birthday, right? You celebrate birthday only when you complete 1 year. So 60th birthday means what? When you complete 60 years, you celebrate 60th birthday. By 31st March of the previous year, 60th birthday already completed. Then he is a senior citizen. Not completed. He is a normal citizen. So as on 31st March, 60 years is over. So more than or equal to 60, he is a senior citizen. More than or equal to 80. More than or equal to 80, he is a super senior citizen or very senior citizen. He is either a super senior citizen or very senior citizen. Just a minute. Yeah. So normal citizen, super citizen, super senior citizen. Now we all know that in income tax there is something called basic exemption limit. Basic exemption limit means what? Up to that income, up to that total income, you need not pay any tax. The tax amount that you have to pay is zero up to a particular income. So that income is called as basic exemption. You know, the wordings are expressed in a different way. The wordings are expressed in little bit different way. The maximum income not chargeable to tax. What is the maximum income that you earn on which income tax department will not collect tax? And remember, that's not a threshold limit, that's a slab limit. Slab limit means what? Whatever the income you have, first, whatever basic exemption is there, up to that income you need not pay any tax. For normal citizen, the basic exemption is 2,50,000. For senior citizen, the basic exemption is 3 lakhs. For super senior citizen, the basic exemption is 5 lakh. You know, for a non-resident who is an individual, the basic exemption is always 2.5 lakh. Here in non-resident, there is no category of senior, super senior, nothing. Non-resident, irrespective of age, they're all, for them always the basic exemption is 2.5 lakh. For a non-resident, the basic exemption is always 2.5 lakh. Remember. Now, what are the tax rates? So, what are the tax rate? We all know that first 2.5 lakh for a normal citizen, the tax is 0. Suppose if the income is more than 2.5, but up to 5 lakh. So, up to 5 lakh, beyond 2.5, whatever that extra income is there, no, 5% is the tax rate. Suppose if you have income more than 5 lakh, up to 5 lakh, whatever that income is there, no, tax at 5. Beyond 5, some income is there, no, but up to 10. Getting it? that amount you tax at 20%. What is the tax rate? 20%. Now suppose if the income is crossing 10 lakhs, then up to 5 lakh, up to 2.5, zero tax rate. From 2.5 to 5, 5%. 5 to 10, 20%. Beyond 10, whatever that extra income is there, no, that income is taxable at 30% flat rate. Suppose if the senior citizen, then initially 3 lakhs, 3 to 5, 5%, 5 to 10, 20%, beyond 10, 30%. Super senior citizen up to 5 straight away exempt. Only after 5 lakhs onwards the tax amount will start. So straight away 20% after 5 lakhs up to 10 lakhs. Beyond 10 lakhs, the tax rate is flat 30%. Now for a non-resident, the basic exemption is always 2.5 lakh. And remember, these tax rates, no, these tax rates, no, we will apply on what? Total income. The tax rates is applicable on what? Total income. Now many of us are having this doubt. Sir, when I'm doing tax computation, every time it is getting wrong. So like, is there any trick? Is there any technique so that we will never compute tax computation wrong? Yes. Whenever you're computing tax, follow this format. There is something called, first what you have to compute is called as basic tax. How to compute this basic tax, I will explain you. For that, add surcharge. For that, add surcharge if applicable. Then you get subtotal. From this subtotal, reduce rebate 87A if applicable, or marginal relief reduce. Now you may say immediately, sir, adding surcharge rebate will not come. No, that's what I told. If this is applicable, whatever is applicable only then. Suppose, if the SSC total income is 4 lakhs only, on 4 lakhs you computed basic tax, will surcharge apply 0. So subtotal will be the basic tax. Now, since the SSC total income is 4 lakhs, it is not exceeding 5, rebate is applicable. This is a standard format I am telling you. If this amount applies, put it. If the amount is not applicable, it's a 0. Simple, not applicable. Very simple. Getting it? Then you will have fifth one, again subtotal. For that, add cess, health and education cess at 4%. Then you will have gross tax liability. What is it? Gross tax liability. Now from this gross tax liability minus TDS, TCS, minus any other reliefs and all, 89 relief, all that, you reduce it. Then you will have balance tax payable. What is it? Balance tax payable. If this balance tax payable is more than 10,000 rupees, section 207 advance tax will apply. If advance tax is applicable, you have to pay the tax in the previous year itself in 4 installments. At least 15% of the tax payable by 15th June, 45% of the tax payable by 15th September, 75% of the tax payable by 15th December, 100% of the tax payable by 15th March. By this way, you need to discharge the tax liability in the same previous year. If you do not, you are liable for 234C, 234B interest. 234C, they will collect interest at 1% per month up to 31st March. After 31st March, from 1st April of the assessment year, 234B will apply. 234C, 234B, there are some relaxations again. Getting it? Anyhow, we will discuss all that in advanced tax provision. Getting it? Fine. I hope you are clear. So if you follow this format, of computation of tax, I'm telling you, you will have enormous clarity. Follow the same format. Now, how to compute this basic tax? Remember, basic tax is computed on what? On total income. On total income, we will compute basic tax. Now, this total income, you have to split into two parts. This total income split into 2 parts. Now, right side, what are the incomes taxable at special rate? And what are the incomes that are taxable at normal rates? What are the incomes that are taxable at special rates? What are the incomes that are taxable at normal rates? Now, whenever you think of rates of tax, immediately you should remember one point. Remember, the rates of income tax are given 2 ways. Certain incomes, they are some rates of tax are based on the type of SSC. Suppose if it's a company, the rate of tax is 30%. 25% in some cases, 22% in some cases. That's a different story. Partnership firms LLP, rate of tax is 30%. Individual 2.5 lakh basic exemption, 2.5 to 5 certain amount of tax, 5%, 5 to 10, 20%, beyond 10, 30%. These are all SSE specific tax rates. What are they called as? SSE specific tax rates. Now there are some incomes where the tax rate on that particular income is fixed for any type of SSE. For any type of SSE, if at all he is having such income, the tax rate on that income alone is at particular rate. Like what? Example, long-term capital gain referred under 112. Yeah, long-term capital gain referred under section 112. The tax rate is 20%. Long-term capital gain referred under 112A. The tax rate is 10% in excess of 1 lakh. In excess of 1 lakh. Suppose the SSE is having long-term capital gain 112A, some 5 lakh. 4 lakh is taxable at 10%. 1 lakh is not exempt, remember. Tax computation will be done only after that 1 lakh amount. It is only tax computation rate. They are not saying up to 1 lakh is exempt. Short-term capital gain referred under 111A, the tax rate is 15%. Casual income, earnings from horse races, all that, the tax rate is 30%. Now, these are the incomes which are called as special incomes. These incomes, suppose if a company is there, generally what is the tax rate for company? 30%. What is the tax rate for partnership firm? 30%. Suppose if the partnership firm is having income which is long-term capital gain, tax rate is 20%. If the partnership firm is having income long-term capital gain 112A, the tax rate is 10%. If the partnership firm is having short-term capital gain under 111A, the tax rate is 15%. Suppose the partnership firm is having normal short-term, not 111A, normal short-term capital gain, 30% flat rate. Partnership firm is getting business income, 30% flat rate. Partnership firm is getting some house property income, 30% flat rate. Only if these incomes are there, only on these incomes, these rates will apply. So these are called as income specific tax rates. Income specific means the tax rate is decided based upon the nature of the income. Now remaining tax rates are called as SSE specific, like we have seen no slab limits. Up to 2.5 tax rate is 0, 2.5 to 5 tax rate is 5%, 5 to 10 tax rate is 20, beyond 10 tax rate is 30. That is in SSE specific. Whatever income you have, that income is taxable at so and so rate. These incomes alone will be taxable at so and so rate. Now suppose sir, my income is actually some 30 lakh. My income is actually 30 lakhs, my total income. By the way, how total income is computed? Total income is computed by gross total income minus chapter 6A deductions. How gross total income is computed? Sum of heads of income plus clubbing and set off and carry forward. All that if you apply, you will get gross total income. From that gross total income, reduce chapter 6 deduction, then you get total income. Now, this total income split into two types. Getting it? So, how much is long-term capital gain 112? Some 5 lakh. How much is long-term capital gain 112A? Example, and I am telling you, some 3 lakh. How much is long-term capital gain and 111A? Some 3 lakh. How much is winnings from lottery, casual income like that? Some 2 lakh. Okay, so 5 plus 3 plus 3 plus 2 is equal to 13. So what is the balancing figure? 17 lakhs. So apart from this, out of 30, these are the incomes which are taxable. These are the incomes which are taxable at special rates. Out of this 30 lakhs, these incomes are taxable at special rates. So eliminating that, what is the balance income? 17. Now this income, is there a special income? No. This is normal income of the SSE. This is not long-term capital gain. This is not long-term capital gain 112A. This is not short-term capital gain 111A. This is not 115BB income. Now what is this? This is a normal income. That's it. Normal income. Normal income means it is taxable at normal rates. Special income means it is taxable at section specific rate. It is taxable at 15%. It is taxable at 30%. Getting it? Now it is 10%, right? In excess of 1 lakh. Now normal rates. Suppose no. If this is a partnership firm, tax rate is 30%. Suppose if it is a company, tax rate is 25. Suppose if it is a company, tax rate is 30. Suppose if it is a foreign company, tax rate is 40. Straight away. Suppose if it is an individual. Okay, how to compute tax for the individual? Assuming normal citizen, resident. Getting it? Now 17 lakh minus 10 lakh, you eliminate on 7 lakh 30%, 2 lakh 10,000, up to 10 lakh 1 lakh 12,500 is equal to, so basic tax is 3 lakh 22,500. Now long term capital gain 5 lakh multiplied by 20%, 1 lakh. Now 3 lakh multiplied by 10%, no. Long term capital gain 112A, the tax rate is 10% on the gain exceeding 1 lakh. Now 3 lakhs is again exceeding 1 lakh. How much is it? 2 lakhs. Only on 2 lakhs 10% will apply. 2 lakhs into 10 is equal to 20,000. So here 3 lakhs into 15% is equal to 45,000. 2 lakhs into 30%, 60,000. Now you total this. I hope you understood how I'm calculating. So 3 lakh 22,500 plus 1 lakh plus 20,000 plus 45,000 plus 60,000 is equal to 5 lakh 47,000, 5 lakh 47,500. Now let us substitute this in our basic tax. So 5 lakh 47,500. Basic tax only we computed. Now add surcharge. Now surcharge is applicable for all types of assets depending upon the total income. For individual, surcharge is applicable if the total income is crossing 50 lakh. If the total income is crossing 50 lakh but not exceeding 1 crore, 10% is the surcharge. If total income is crossing 1 crore but not exceeding 2 crore, 15%. If the total income is crossing 2 crore but not exceeding 5 crore, 25%. If total income is crossing 5 crore, 37% is the surcharge. Anyhow, individuals related surcharge, there is one confusion among students. I will clarify it separately. Getting it? Once I finish this, I will clarify. Now for companies, what is the surcharge rate? 7%, 12%. So partnership firm, surcharge rate is there. Getting it? Directly 12%. The partnership firm total income is crossing 1 crore, straight away the surcharge rate is 12%. I will show you here itself directly better. So when surcharge is applicable, so I will come back to this. So for partnership firms, LLPs, local authorities, straight away, if the total income is not exceeding 1 crore, surcharge is 0. If the total income is exceeding 1 crore, surcharge is applicable at 12%. Now here in this question, the total income is what? Total income in this question, in our example, 30 lakhs only, not 1 crore. Therefore, surcharge is 0. Therefore, the surcharge is 0. Surcharge is what? 0. Now subtotal 5,47,500. Now rebate relief. In this case not applicable. So 5,47,500 plus 4%. You will have gross tax liability. Very simple. Watch repeatedly this video once again in the past 5-10 minutes. Once again, you will understand more. You will understand clearly. Getting it? Hardly 30 minutes we have covered, but we covered many points within this 30 minutes itself. Now, so this is for firms. Suppose now for corporate society, what is the surcharge rate applicable? Not required from exam point of view, because at CA Inter corporate society taxation is not that important. Getting it? So now domestic company. Suppose if the domestic company is having total income exceeding 1 crore but not exceeding 10 crore. Suppose if the company total income is 5 crore or 6 crore or 2 crore or 3 crore or 1.5 crore or up to 10 crore, the surcharge rate is 7%. So we computed basic tax now. On that 7% you have to apply surcharge. Suppose if the company total income is exceeding 10 crore 5 lakh is there, straight away the surcharge rate is 12%. Now here there is a concept called marginal relief. I will come back to it later. Now look at individuals related surcharge rate. So for an individual, HUF, AOP, BOI, any artificial judicial person, what is the surcharge rate applicable? If the total income of an individual is not exceeding 50, there is no surcharge at all. In our example, total income is 30 lakhs. We have got a tax amount of 5,47,000. What is the surcharge? 0. Because the total income is not exceeding 50 lakh. Suppose if the total income is exceeding 50 lakh, but not exceeding 1 crore. If the total income is exceeding 50 lakh, but not exceeding 1 crore, surcharge is 10%. What is the rate of surcharge? 10%. If total income is exceeding 1 crore, but not exceeding 2 crore, surcharge rate is 15%. Now, here there are some important words that you need to understand. You see here, this is the table. Suppose if the total income is exceeding 50 lakh, but not exceeding 1 crore, rate of surcharge is 10%. Now, when you are calculating surcharge, especially for individual, HUF, AOP, BOI, artificial judicial person, total income may have dividend income, dividend income, long-term capital gain 112, long-term capital gain 112A, short-term capital gain 111A. Getting it? And just a minute. That's it. Including dividend, including all that. Yeah, fine. So getting it. Now, dividend is generally taxable at normal rates. 112, 20%. This is 10%. This is 15%. Getting it. Now, if the total income is having these incomes, no, and remaining income is called as balancing figure. If this total income is exceeding 2 crore, but not exceeding 5 crore, the rate of surcharge is 25%. If this total income is generally exceeding 5 crore, the rate of surcharge is 37%. But there is a provision. The provision says the tax amount, whatever the tax amount that is computed, whatever the basic tax portion is there on these incomes, whatever basic tax portions is there on these incomes, the surcharge rate on the surcharge rate on the basic tax portion on these four incomes cannot exceed 15%. The maximum surcharge rate that is applicable for an individual HUF, AOP, BOI, artificial judicial persons in respect of tax amount on these special incomes, on the dividend income, LTCG 112, LTCG 112A, STCG 111A. Again, here lotteries is not covered. Getting the point? Lottery income is not covered. Anyhow, that not a noteworthy observation. Getting it? So if these incomes, on these incomes, if the surcharge rate cannot exceed 15%. Like, what does it mean? Here we have given some examples. Here we have given examples. You see here. Now here itself you observe. Generally, you see first category, if the total income is exceeding 50 lakh but not exceeding 1 crore, surcharge rate is 10%. 10% is same. Even on LTCG, STCG, all that, whatever tax you computed on that also 10% only. Suppose if the total income, including these incomes, if it is exceeding 1 crore but not exceeding 2 crore, surcharge rate is 15. But if the total income is exceeding 2 crore, excluding which incomes? Excluding dividend, capital gains, excluding dividend, excluding capital gains incomes. Which capital gains? 112, 112A, 111A. Normal short-term capital gain we will not exclude. If the total income excluding this is exceeding 2 crore rupee, the surcharge rate is 25. But you compute tax, right? On long-term capital gain, on short-term capital gain 111A, on dividend income tax portion is there, no? On that portion, surcharge is still 15% only. The surcharge is still 15% only. Same way, if the total income excluding this income is crossing 5 crore, surcharge rate on that particular tax portion on that total income, excluding these incomes, whatever total income is there, on that you compute tax rate, straight away the surcharge rate is 37. However, if you compute any tax on long-term capital gain, 111A and dividend income, on that particular income, the surcharge rate cannot exceed 15%. That's it. So that's which is fifth case. This is what many students is having confusion. Suppose, no. Here they say again, where total income including all this is exceeding 2 crore but not covered in the above. What does it mean? Very simple. Suppose if you are having some business income 1.5 crore. You are having long-term capital gain 40 lakh. You are having long-term capital gain 112A, some 30 lakh. You are having short-term capital gain 111A, some 10 lakh. You are having dividend income. Some 30 lakh. Now, what is your total income? You see here, total income 1.5 crore plus 40 lakh plus 30 lakh plus 10 lakh plus 30 is equal to 260. Now let's apply the criteria. Is your total income including all these exceeding 50 lakh? Yes. Not exceeding 1 crore? Here it is 2.6. So category 1 will not apply. Category 2, total income including all this. Total income including all these incomes exceeding 1 crore but not exceeding 2. No, here 2.6. So category 2 also will not apply. Category 3, is your total income excluding these incomes, excluding whatever I highlighted within the red color, excluding this, is your total income exceeding 2 crore? 1.5 only. Category 3 will not apply. Is your total income excluding this, is it more than 5 crore? Category 4? No, it is 1.5 only. Now, is your total income including all this? Is your total income including all this is more than 2 crore? Yes. Then straight away surcharge rate is 15%. Straight away surcharge rate is 15%. Sir, in category 2 also we have seen 15. No. In category 2, your total income including all this but not exceeding 2 crore. Your total income is not exceeding 2 crore. Your total income is more than 1 crore but not exceeding 2 crore, up to that 15%. But you are saying, sir, if the total income is more than 2 crore also 15% only. No. Logic is very simple. Very simple logic. If your total income is in this case, total income crossed 2 crores, sir? Yes, sir, it is crossed. Because of what incomes? Normally, my business income is 1.5 only. But because of dividend, because of LTCC, because of STCC, because of these items only my total income crossed 2 crore. Otherwise, my total income is less than 2 crore. Because of these incomes, if the total income is crossing 2 crore, then entire total income is liable for surcharge of 15% only. That's what they are telling you. Suppose no, excluding them, your total income is not exceeding 2 crore. Excluding them, you reduce it. In spite of it, your total income is crossing 2 crore. Then you are liable to pay 25% or 37% as the case may be. Because of these incomes only, total income is exceeding 2 crore. Because of these incomes, total income is exceeding 2 crore. Getting the point? Straight away the surcharge rate is 15%. Generally, the moment your income crosses 2 crore, the surcharge rate is applicable is 25%. Simple. The moment your income crosses 2 crore, the surcharge rate is 25 or 37. Suppose if the income is more than 5 crore, surcharge rate is 37. If the income is more than 2 but not exceeding 5, 25. However, your total income is more than 2 crore, but your total income crossed 2 crore, right? Because of long-term capital gain, short-term capital gain, 111A, and dividend income. If these 3 incomes you eliminate, no, your total income is less than 2 crore. If you eliminate these incomes, excluding them, your total income is less than 2 crore. In such a case, the maximum surcharge rate on your entire income is 15%. The surcharge rate applicable for you itself is 15%. I hope you are clear. In fact, I will attach to this video a surcharge video where I specifically explained with a problem on this in my regular class. So that I just uploaded on YouTube long ago. So I will attach that video. You watch that, you will have more clarity, because computation also we will make. So that's about the surcharge rate for individuals, HUF, AOP, BY. So many students have the problem with the 5th point. Total income including these incomes exceeding 2 crore but not covered under the above cases 15%. So what is it? They confuse. Now I hope you got clarity. Once again, the past 15 minutes, 10-15 minutes, whatever is there, please watch it once again. You will have more clarity. So that's regarding surcharge rate for individuals. So like first you have to complete basic tax, then odd surcharge, you get subtotal. From that, if rebate or relief anything is applicable, reduce that. Then you will have again subtotal. For that, add cess 4%, you will have gross tax liability. Now what is relief? Marginal relief. Very simple. Marginal relief, the point is very simple. Marginal relief. What is the logic behind this marginal relief? So for individuals I will take individual. Suppose there is an individual, he is having total income of I will give you one example. Based on the remaining examples you can frame. Individual is having total income of 2 crore 1 lakh. The individual is having total income of how much? Total income is 2 crore 1 lakh. Okay, if total income is 2 crore 1 lakh, 2 crore 1 lakh, now what is the basic tax on that? What is the basic tax on that? So 2 crore 1 lakh. So 1 crore, sorry, 2 crore 1 lakh, right? Minus basic taxes 58 lakh 42,500 plus. What is the surcharge applicable? Since total income is crossing 2 crore, we all know. Here, let us assume there is no long-term capital gain, nothing, dividend, nothing is there. Normal dividend is not there, long-term capital, nothing is there. So straight away the surcharge rate is applicable. Since it is crossing 2 crore, the straight away surcharge rate is 25%. What is the surcharge rate applicable? 25%. So 5842 500 into 25%. How much is that? 1 crore. Sorry. 14 lakh 60,625. What is the subtotal? 5842 500 plus 25%. 73 lakh 3,125. This is the subtotal. Now this SSC is eligible for marginal relief. What do you mean by marginal relief? Now you see, suppose no, this individual is having how much income? 2 crore 1 lakh. Getting the point? Suppose if this fellow is having exactly 2 crore income. Suppose if this fellow is having exactly 2 crore income. How much is the tax? How much is the tax amount? So 2 crore means what? On 1 crore 90 lakh 30%, 1 lakh 12,500 is equal to, so basic tax will be so 5 lakh 50 if at all individual is having exactly 2 crore income, 58 lakh 12,500, and if the income is only 2 crore, not exceeding 2 crore, the surcharge rate is 15% only, yes or no? Into 15%, how much it is? 8,71,875. What is the total tax here? 58 12,500 plus 875 is equal to 66,84,375. Now here the total income is exceeding how much? By 1 lakh. 2 crore 1 lakh is there. If at all it is 2 crore 1 lakh. $58 lakh 42,500. Since total income crossed 2 crore, 25% is applicable. 58 42,500 into 25%. 14 lakh 60,625. What is the tax? 58 42,500 plus 25%. 73 lakh 3,125. Now you see, very clever. Very you see. Now you see, if at all the income of the individual is just 2 crore. His tax plus surcharge put together 66,84,000. Now here in another case, this fellow has earned 1 lakh extra income, just to 1 lakh, because he is earning extra 1 lakh. Now here tell me, what is the total income? Here how much is the income extra? 1 lakh. How much is the extra income? He earned 1 lakh. Now because of this 1 lakh extra income, how much extra tax he is paying? 73,03,125 minus 73,03,125 minus 66,84,375. is equal to 6,18,750. Now you see this example. If at all the SSC is having exactly 2 crore income, his tax amount would be 66,84,375 plus education cess he will add and pay. But because the SSC is earning 1 lakh rupee extra, department is asking him to pay 73,03,000 rupees tax. If at all this 1 lakh is not there, 66.8 lakh only. Because of this 1 lakh 73.3. Now SSC is arguing, sir, I'm having only 1 lakh extra income, but you're asking me to pay 6,80,000 rupees tax because of this 1 lakh. How unfair. If you want, I'll pay 1 lakh itself, sir. Sir, do one thing. Calculate tax on 2 crores, sir. Extra 1 lakh is there, you take it. Income itself I'll pay, not even tax. I'll pay income itself. Generally, what I should pay? Tax on the income I should pay. I will give you income itself. So whatever my tax is there, 66,84,375. For that I will add my 1 lakh rupee income and I will pay to you directly. Don't ask me this amount. Consider my income is only 2 crore. This 1 lakh I am donating to income tax department. 5,18,000 rupees. See, for getting 1 lakh extra income, you are asking me 6,18,000 rupees tax. Now, this tax amount is beyond the income itself. This tax amount, the extra tax, see, if I have additional income, I have to pay additional tax, I know. But here, I am having extra income 1 lakh only, but you are asking me to pay 6,18,000, which means additionally you are asking 5,18,750 additional tax beyond my income. Please give me this relief. Please give me this 5,18,000 relief to me. I am ready to pay that extra 1 lakh itself as it is. This is called marginal relief. Just for 1 lakh income, department is asking to pay 6 lakh rupees tax. So indirectly, SSC is claiming 5,18,000 rupees relief. Getting the point? If you want, I'll pay 1 lakh itself directly. So whatever on 2 crore tax is there, plus I will add this 1 lakh income and I'll pay it as tax. Don't think 1 lakh income I have. So this is called relief. Now for this, indirectly, what are they saying? Step 1. Income tax department is asking you to compute basic tax and surcharge on total income. Surcharge at applicable rate. Whatever surcharge. Suppose if the total income is more than 2 crore, surcharge applicable rate is 25%. 25%, 15% or 25% or 37%. Getting it? Step number 2. Compute tax on 2 crore or even 10% also. Compute tax on 50 lakh rupee or 1 crore rupee or 2 crore rupee or exactly 5 crore rupee. Getting the point? Plus this is basic tax. Compute basic tax on these plus total income minus 50 lakh or 1 crore or 2 crore or 5 crore as the case may be. Getting it? Compute basic tax on 50, 1 crore, 2 crore, 5 crore. And surcharge on 1 crore, surcharge on 2 crore, surcharge on 5 crore. Nothing but in step number 1, whatever applicable surcharge rate is there at that rate. In step number 2, applicable rate below another rate is there. No. Suppose if applicable rate is 37, then below it is 25%. Suppose in the step number 1 you computed 25, then in the step number 2 you computed 15. So like that. Getting it? See, because of what reason surcharge rate increased? Getting it? What reason? Income is exceeding 2 crore. That's why surcharge rate is 25%. Then in step number 1, 25%. In step number 2, on 2 crore, what is the surcharge rate applicable? On 2 crore, 15% only. Suppose in step number 1, SSC total income is 5 crore 1 lakh. Surcharge rate is 37%. Step number 2, if the SSC income is 5 crore, on 5 crore, compute tax amount plus surcharge at 25% plus total income minus 5 crore. So you see what is my argument? SSC is ready to pay and SSC is ready to pay step number 2. What is step number 2? On 5 crore or on 2 crore, whatever tax is there, that much I am ready to pay plus whatever surcharge plus beyond the 2 or beyond that 5, whatever extra income is there, that also I will pay. Don't ask me the tax amount as given in step number 1 because that is so aggressive. So this is marginal relief concept. This is what marginal, this is whatever I have given you here explanation, right? Whatever explanation I have given you here, right? So that same thing is expressed in the form of a formula. So that formula is also given here. You see? So this entirely, we have given illustrations also. Getting it? So I told, right, surcharge video I will attach. In the same video, I think marginal relief computation is also there. Anyhow, I will attach both marginal relief computation video as well as surcharge video. I will attach. If you have time, you can watch it. If at all you already understood, you are supposed to understand now by this time. You should not be looking for, sir, more detailed example, no, you should not be. Now it is not the time for learning everything. This is the time for revising everything. I'm only revising, man. In the revision itself, I'm giving you this much detailed information, which means you need to feel happy for that. Getting it? So this kind of example I took and explained means you need to be very happy for that. That's it. I hope you understood surcharge rates. I hope you understood marginal relief, why we compute. See, marginal relief is computed very simple. If at all total income exceeding so and so limit, rate surcharge is applicable at so and so rate. Marginal relief main objective is because of applying surcharge or because of applying higher surcharge rate, is the SSC paying additional tax beyond his additional income? If so, the excess tax beyond the additional income will be treated as relief, will be given as relief to the SSC. So that is a concept behind marginal relief. So with this, I think some key points I have covered. So how to compute, especially the tax, how to compute tax. Now again, no. Generally, if at all SSC is having agricultural income, it is exempt from tax. Now, by the way, what are all we have covered is we have discussed certain introduction. We have discussed how to compute basic tax. So when you're computing basic tax, total income split into two parts: special items and normal items. On special items, apply special rates. On normal items, apply flat rate or slab rate, whatever is applicable. Then you compute basic tax. Now add surcharge. When surcharge is applicable, I gave you limits. So based on those limits, surcharge will be applicable. Fine. So now suppose if the SSE is having agriculture income, we all know that 10 subsection 1 says agriculture income is exempt from tax. You know what? The objective of giving exemption, the objective of not taxing agriculture income is very simple. Generally, farmers, agriculture being a very important sector, many farmers, the source of income for them is only agriculture activity. And since agriculture is by birth, nobody can collect tax on that. With that logic, Constitution has given exemption. Now, suppose if I'm a farmer, I don't have any income except agriculture income. Whatever income I'm getting is fully exempt. Suppose I'm a businessman. I am having normal business income of some 2 crore. In addition to that, I'm having 1 crore agriculture income also. I'm having agriculture income also, which means I am not having exclusively agriculture income. I am having other incomes along with that. Agriculture income is also there. These kinds of SSEs who are having normal incomes like taxable incomes and also is having agriculture income, department don't want to give absolute exemption. So they want to collect a tax on agriculture income from these SSEs indirectly. That is called aggregation concept. Aggregation of agriculture income. What does it mean? Step number one. So the SSE has to compute tax on total income plus agriculture income, including agriculture income. On that you compute basic tax plus surcharge if applicable. Step number 2. Whatever basic exemption limit is there, for that add agriculture income. On that you apply normal tax rates, whatever is applicable. Getting the point? Whatever rate is applicable. Just a minute. Yeah, sorry for the interruption. Sudden phone call. So what are they saying? First of all, how to compute aggregation? Very simple. The logic behind this aggregation concept is, if an individual, see, by the way, this aggregation concept is not applicable for company, not applicable for firm, not applicable. Very simple. It is not applicable for the SSEs whose total incomes are straight away taxable at flat rates. This aggregation concept is applicable only for the SSEs whose incomes are taxable at slab rates. Very simple. Getting it? So compute tax on total income means non-agriculture income plus agriculture income, total it, and compute tax on that. Sir, agriculture income is exempt. You are asking me to compute tax on agriculture income also. How come? No, compute it. Don't include surcharge. If at all I told you previously you include surcharge, ignore it. No need to include surcharge. Basic tax. This is nothing but basic tax. Then step number 2. What is basic exemption? For that add agriculture income. Then you will get total income again, right? On this compute basic tax. Now step 1 minus step 2, whatever step 3 is there, no, that amount is treated as final basic tax. This amount is treated as what? Final basic tax. If at all you are having agriculture income, basic tax computation shall be done with these 3 steps, using these 3 steps. Getting it? Now here, suppose if you are having agriculture income, suppose I'm having some business income, I'm having house property income, I'm having salary income, I'm having long-term capital gain 112, I'm having long-term capital gain 112A, I'm having casual income, 115BB. I'm also having agriculture income. Getting it? Now my basic my business income is some 20 lakh, my house property income is some 5 lakh, my salary income is some 5 lakh, my long-term capital gain is 5 lakh, 112A is 5 lakh, 115BB is some 10 lakh, and agriculture income is 10 lakh. Now normally when I compute total income, only these I will add. Only these I will add in my total income. So what are they? 20 plus 5 plus 5 plus 5 plus 5 plus 10 is equal to 50. So 50 lakhs is what my total income. But remember, I'm having agriculture income also 10 lakhs. I'm having agriculture income also 10 lakhs. Now how to compute basic tax? This basic tax computation itself is working note 1. So how to compute this basic tax? I told you, right? Basic tax computation. What is the total income? Step number 1. Non-agricultural income 50 plus agricultural income 10 is equal to 60. Now split into two parts. Now what? Long-term capital gain 112 5 lakh. Long-term capital gain 112A 5 lakh. Short-term capital gain 111A. Did I give short-term capital gain information in this question? No, it is not given. Lottery income is given. Sorry. Lottery income is given. So straight away lottery. So winnings income 115BB some 10 lakh. What is the balancing figure? What is the balancing figure? So 60 minus 20 40. So on this apply slab rates. Apply slab rates. So 40 lakhs slab rates means what? 30 lakhs multiplied by 30 percentage. 30 lakhs multiplied by 30 percentage. 112,500 is equal to 10 lakh 12,500. Whereas on this 20 percentage, on this 10 percentage, on 4 lakh only, on this 30 percentage. So 5 lakh into 20 percentage 1 lakh, 4 lakh into 10 percentage 40,000, 10 lakh into 30 percentage 3 lakh. So calculate what is the total basic tax. 10 lakh 12,500 plus 1 lakh plus 40,000 plus 3 lakh is equal to 14 lakh 52,500. 14 lakh 52,500. Now step number 2. This SSC basic exemption limit is 2,50,000 only. Whereas this SSC agriculture income is 10 lakhs. On this, what is the tax amount you compute? This is the total income now. As per step number 2, this is the total income. So 2,50,000 into 30 percentage. So 1,12,500 is equal to 1,87,500. Final basic tax. What is the basic tax? Step 1 minus step 2. 14,52,500 minus 187,500 is equal to 12,65,000 is the final basic tax. This is the basic tax. Normally the SSC is having 50 lakhs only, right? Yes or no? Long-term capital gain 5 lakh, 112A that is 5 lakh, 115BB that is how much? 10. So balancing figure is 30. Normally if I compute without ignoring agricultural income, if I compute tax, SSC total income is 50 lakhs only, ignoring agricultural income, because only this is what taxable. Yes or no? So basic tax will be 7,12,500, 1,40,000, 3 lakh. Basic tax will be 11,52,500 normally. But you see, by applying aggregation concept, the basic tax amount is 1265. Without aggregation concept, 11,52,000. Indirectly, department is collecting tax on agriculture income. Indirectly, what are they saying? If at all the SSC is having exclusively agriculture income, it is fully exempt. No need to collect pay it. If at all the SSC is having normal income plus agriculture income, then basic tax has to be computed in 3 steps. Step number 1, total income plus agricultural income, revised total income on that compute tax, basic tax. Step number 2, basic exemption limit plus agricultural income, that is on the total income, compute again basic tax. Step number 3, step number 1 minus step number 2 is equal to step number 3. That is called as final basic tax. On that basic tax, again as usual, I told you format, right? Basic tax plus surcharge, subtotal minus rebate or relief. Again, you have subtotal plus 4% cess. Clarity. Now further, now there is another concept called, now basic tax computation we understood, surcharge we understood, subtotal minus marginal relief we understood. Now rebate. What is it? Rebate under section 87A. So what is this rebate under section 87A is all about? This is simply saying, if total income, this is applicable only for resident individual. This is applicable only for what? A resident individual. For a non-residents, rebate is not available. If resident individual, total income is not exceeding 5 lakh. If the total income of the resident individual is not exceeding 5 lakh, then basic tax is exempt up to 12,500. Up to 12,500, basic tax will be given as rebate. Nothing but discount. Whatever the tax is on that, there is a discount. How much discount? Maximum up to 12,500. Now this rebate is not applicable for 112A tax amount. Whatever tax you computed under 112A, rebate will not apply. Very simple. Now you see. Suppose I'm having salary income which is 3 lakh and I'm having 112A. Let us assume I'm having 115BB lottery income also 1 lakh. and I'm having 112A, which is again 1 lakh. My total income is 5 lakh. So what is my basic tax here? What is my basic tax here? Let us compute basic tax on this. So let us look at this basic tax. So what is my total income? 5 lakh. So what are my special incomes? Long term capital gain 112. So 112, how much is my long term capital gain? So sorry, 112A 1 lakh. Sorry, 112A, no, let us assume sorry 50,000. 112A, let's assume 1,50,000. Just 3,50,000, 1,50,000. Okay. So 112A, how much? 1,50,000. Now again my 115BB lottery income is how much? 50,000. What is the balancing figure? Salary 3 lakh. On this 3 lakhs, what is the tax rate? Let us assume is a normal citizen. Up to 2.5 it is exempted. So 50,000 into 5%, 2,500 rupees. Here it is up to 1 lakh. Up to 1 lakh there is no tax rate. Only 50,000 into 10%, 5,000. Now here 115BB multiplied by 30%. So 50,000 into 30% is how much? 15,000. Now what is the total tax here? What is the total tax here? So 15,000 plus 5,000 plus 2,500. How much it is? 22,500. Now what is my basic tax? 22,500. Surcharge general not applicable, minus rebate. Rebate under section 87A. Now when you are calculating rebate, no, split this into two parts. 112A tax amount how much? Balancing figure tax amount how much? 112A tax amount how much we got? 5,000. 112A tax amount how much we got? 5,000. Now balance tax is how much? 17,500. Only on this you will claim rebate. Minus how much rebate you can claim? Maximum 12,500. So what is the balance tax? 5,000. So this 5,000 plus that 5,000. So that is the balance tax, which is 10,000 plus education says 4%. This is how we have to. Suppose if this balancing figure is 7,500. Your total tax itself is 12,500, not 22,500. It is only 12,500 your basic tax. Out of this 5,000 is 112A tax. Now 7,500 is only normal basic tax other than 112A. Then rebate is 7,500 only. On the tax portion computed on 112A capital gain, rebate under 87A we will not be giving. Even rebate is eligible. Suppose if at all you are having lottery income, on the 30% tax is there. On that also you can claim rebate. If at all your total income as a whole do not exceed 5 lakh. For calculating rebate, total income shall not exceed 5 lakh. That's it. Okay, now I am calculating rebate. Again, rebate cannot be calculated. Rebate cannot be given on the tax amount of 112A capital gain. So that's what they are saying. So listen to this past 5-10 minutes discussion once again. You will have more clarity. So that's 87A rebate is all about. Are you clear? Now these are the normal tax rates that are applicable for individual, HUF, surcharge, marginal relief, rebate. So aggregation of agricultural income, all that I have covered within this 1 hour itself. Now there is something called 115JC, nothing but 115JEE. Both the sections are dealing with same thing. 115JEE talking about applicability of 115JC indirectly. So they both are interrelated sections. And we should also talk about 115BAC, concessional tax regime. Getting it? So continue watching this video. Take some 5 to 10 minutes, 5 minutes break. Then continue watching this video. So I will stop this video here and I will do another video and I will attach this video or I will post it as a next video. Very simple. Getting it? So that's it. So 115BAC, or else let me do one thing. Let us consider this as a basic concepts video. Now 115BAC and 115JC, alternate minimum tax, that concept. This concept I will do it as a separate video. Many times these concepts are being tested. Be careful. Getting it? In order to understand these sections, you need to understand 10AA. You need to have a basic idea of 35AD. Especially these two sections, knowledge is very important. Okay, that's it. Take care. In the next video, I will be coming up with these two provisions. By the way, I hope you are enjoying this tax revision. I'm revising you all the key points, especially. May not be entire subject, but key points I'm revising you. Yeah, take care.